Hey, good evening. How you guys doing? All right. Hey, just read. Reggie, Jack, Jen, David, Tyrese is here. Good job, by the way. Patricia, Carol, Marvin made it. Hey, Michael, Jane, Lisa, Rodrigo. Good, good, good. Good to see you guys here. Got a good show tonight, so let's get going. All right, disclaimer as usual, nothing presented in this webinar or video presentation, vocally or visually, is to be taken as trading advice. All content of the presentation is for educational purposes only. You know trading involves risk, so do use discretionary funds when trading. All right. Okay, so today was what? Construction PMI, right? Nothing much going on there. Unemployment claims, along with CAD at the same time. Tomorrow, the big one is Yellen at 1 o'clock. All right, that's the big one tomorrow. Now, you probably will be like, wait a minute, it's March. How come we don't have non-farm? It's first Friday, no non-farm. Non-farm is next week. Why do they do that? I have no idea. All right, if you look, farm is next Friday. Okay, so it's not tomorrow, next Friday. All right, usually the day before, you're going to have ECB, and the day before, you're going to have, they didn't have it over here, but they'll have the pound. I guess not here, the cash rate for Aussie on Monday. All right, awesome. All right. Wow, look at the amount of harmonics, crazy. Okay, we'll take a look at 3 to 4 of them. All right, EJ is still happening. They're still trying. Nothing's going on. All right, they're still trying. So I'm expecting to come down, hit it, and give me a 4-hour 50-50 bounce. Okay, 4-hour 50-50 bounce. That's the expected move. Look at how they did it right here. See it? Boom. They just did it over the weekend, and then it just gapped down, dropped. It's kind of cool. So that's the move up. Now, whether it's going to go 3 levels to the right, I don't know. I know is from here to here, we're expecting this bounce back to the male. All right. So this is still active. So we leave that one alone. ECAD is kind of sort of still active. Remember on the second leg, come down. This is totally overbought. As you can see, 63, 68, totally overbought. I was expecting this to actually come down, hit the stop low and rise, give you a 4-hour 50-50 bounce. Let's see on the second leg if there was in fact a pattern on the 15-minute chart. That means this is my first leg. Here's my second leg, and sure enough, there was an advanced stem, right? Out of the band in the band, RSI line below, signal line below the market baseline right around here. Problem with that is, what, too late and too close to the EMA. Okay? So that's the pass. It's still trying though, it's still trying. All right, if you've noticed sometimes with these harmonics, they'll mess around and they'll mess around, and when's the best time to take it? When it closes below the 13. How do I know? Let's see if there's an example of it. Okay? Doesn't matter, right? I know it's at level 3. Here. When's the best time to enter? Above the 13. Well, from here, 1/3 pullback, bam, 65 pips. Right? It's easy. Well, not really, but conceptually, it's hanging out. Don't take the short until, boom, they break, and then they're going to come down here. They're collecting contracts right now. Okay, but you can start to see one leg out of the band, one leg in the band. All right, when this one closes below, it's going to break and close below the market baseline. Okay. Okay. Interesting one, right? They did it over here, closed below the 13. They came back. They did it over here again, closed below the 13. Guess what? That's just short. Bam, 60 pips. Okay, but let's see if there's the harmonic. With the harmonic over here, let's see if there's a 15-minute pattern right off that high. Okay, So where's my harmonic? My harmonic is right here, and I don't really see anything. There's no real pattern in here, right? It's just nothing. Especially since the 50-200 is crossed up. I don't want to go short anywhere in here. And then you got a weekend and all that. All right, so in reality, you got nothing in there. Let's look at the next one. All right, the next one is, okay, so this is interesting. Yeah, euro pound, we have this little box marked here saying that potentially it could drop, but it didn't. It rose out. So let's take a look and see if there was any way you could have gotten messed up on it. All right, so this is the box I drew here, but here was the harmonic. You see the box ended over here. So I'm trying to take the trade inside this black box, not all the way out here. I'm trying to trade inside this black box. Okay, so if the black box ends and the harmonic still exists, is mainly because price hasn't closed above this box. All right, once price closed above this box, the harmonic will disappear. Okay. All right, so let's take a look. So this is nothing, right? This is probably news. They closed below 13, they came back above. This is news. You're not going to trade. You're just simply going to wait for them to close below again. And this move here should line up with RSI line below the signal line below the market baseline, which it does, but you don't get a lot of pips. You get about 20 pips out of this move. All right. Remember, the ADR on euro pound is pretty light, so you got to make sure you're not expecting to go 50 pips because that's one whole ADR. Okay. Let's take a look at the 4-hour chart, and this is just absolutely not clean. All right, so there was nothing much there. Okay, next one is GU is still active. Okay, for a long. Remember, we had this line drawn here with the trap volume sitting over here as well as the quarter point. Guess what they did? They spiked both. They hit the stop on both, right to the quarter point. Boom, and now it looks like it's trying to go long from here. All right, you have almost a shark fin blood in the water, not really. Okay, you just have out of the band. So this is your outside structure. Okay, so you don't have anything yet, but you're going to look for reason to go long, and they do this on purpose. They're collecting contracts. Okay, let's look at something a little bit more recent. Yeah, this NU is beautiful. Look at it screaming down here. A crab, you got a crab. When you get a crab that's really, really, really extended, look for a reversal pattern. Okay, let's look at NJ. NJ was nice. Okay, like I was telling you, wait for the harmonic, close below 13, wait for that pullback, and it's lights out, man. Boom. All right, I know a couple of people that grabbed this trade right here to the downside. All right, they should have hit 50 pips. Phenomenal. Let's take a look at this harmonic to see if there was a pattern in here. Okay, so let's shrink this for a little bit. Here's the harmonic. Okay, so now you know me. I don't like to take the trade until with the 50-200 cross. I don't like to take until they close below the water with a nice, beautiful shift candle, which is what they did. So your entry is over there. You measure it from here to here. It's about 17. Right. My stop is above here, which is almost about 17 pips. Almost, yeah, anything past 15 pips, 16 pips is good enough for me. Okay, you do have the Asian range as well as the male. Okay, shift, take that trade, and then just hold it. Okay, because if you notice your entry here, let's presume you took the trade over here. Right, you're actually taking this trade in this candle, so this candle hasn't closed yet. Okay, still kind of cool. Before this candle even closes, so that's pretty awesome. All right. Okay, and I think let's do one more. Let's see which one is. Yeah, let's look at GN. Okay, GN had in level 1 long on the 4-hour chart. Okay, sometimes my 1-hour chart looks a little wacky. It's mainly because I'm kind of adjusting to the 4-hour levels at the same time. So let's take a look. You can see there's a box over here and there's another box over here. So they probably came to the first leg here, they punched it, and then they came back again, they punched it again, right? So let's take a look and see on the 15 if there was any harmonic was over here. All right, so here's the half a bat coming off this harmonic. Here's my apex. The first time it closed above the 13, back below, I got to price, got to take it out, and then sure enough, I got to measure the candle. Let me blow it up a little so you can see. Here's the harmonic. Why is it cool? There's the blue tracer involved. Okay, there's the blue tracer involved. So it's almost like a 12-ish looking setup, right? 22, maybe a 12, 21 setup, right? With one leg here. So you measure this candle. It's kind of small. 12 to 15 pips, that's about right? 12 to 15 pip shift candle. You wait for the pullback, and that's your entry. Now you're going to measure from here to here. Okay, that's more than enough pips, more than 17 pips. You're going to take it, boom, done. Okay, followed by what? I told you that if you can't take the harmonic, wait for the intraday 50-50 bounce, right? 1350 cross. Here's my 50-50 bounce. I'm going to go along here. Next move. Boom, 50 pips. All right, it's pretty awesome. Okay, here's my next harmonic coming in here, right? So this is the first time it closed above the 13 back below. Now, if I was going to take long, I won't take the long here. Why? Because if I measure from the second leg to the first leg, it's more than 10 pips. It's 58, so it has the half a bat. It's going to take out the apex. This is my apex, right? Same thing, doesn't matter because this one never went all the way down. So it's still a half a bat. That means price got to close above the apex, which is here. Okay, and the only candle that does it is right here. Boom. So wait for measure the candle. 50 pips, no problem. Big candle, 50% pullback. Drop the fib, 50% pullback. Put a pending right here. It'll grab your pending right over here. Guess where's your stop? Below that candle. So you got a 27 pip stop. And notice it never closed below the 13 today, long. All right. The next move I'm looking for is a ID move, intraday bounce, which they never did. If they did, I would have killed them. Okay. Boom, it would have been done. Okay. It's pretty simple. You miss this, you wait for this, because the harmonic, like Steve taught us, identifies the potential reversal point. So if the reversal area looks a little, little challenging for you, you wait for the first pullback, which should not be a challenge for you. Okay? Awesome. All right. Let's move forward. Okay. Hey, Adriano. Okay. All right. Eurodollar. Had it coming off this reset. Beautiful 1 hour 50-50 bounce. Gorgeous drop. Okay. And then it came back and it gave you a very nice, and I know a lot of you guys grabbed this trade. Very proud. Coming off this anchor formation, right? This ID 50, intraday 50-50 bounce. As well as, it's called a combo trade, right? And an AR, right? They just break out traders, come back, hit, close below, and you just short it. Boom. Okay. What did they do later on? They went and induced below the Asian low. Below the blue tracer, right to the quarter point. Pull back to the 0-0 line. They rolled over. You shorted again. Boom. Where's your target? Usually this area. Okay, but it did give you almost 20 pips on this move. This white line is trap volume to the left. Okay, they came one there. They came within a pip. They held the trap volume and they didn't release them. They pulled back. So what am I expecting tomorrow? Come back at the stop high. MNW of the Mayo, level 2, short. Okay. EJ. EJ, we had the safety move coming out of level 1, a safety move in here. Okay. All right. So the next move I'm expecting with this 1350 cross is a water bounce, which they never did. Okay. They just kind of messed around. Starting to do it right now. To the downside, I'm expecting, they haven't touched the blueberry yet, so I'm expecting to hit it down and then come back to the blueberry. All right, so let's see on the 15 minutes if there was an opportunity. All right, so the only thing I see here is a inducement out of the Asian box, right? And they thought it to come back down right around here to hit the come back, and it looks very messy. First of all, remember I've started to move into a level 3, so I don't like to take a bounce trade in level 3. Okay, if it comes here and comes off this level 2 and gives me a W off the Mayo, I'll be happy and eager to enter this trade long. But I don't want to take once I get into a level 3 situation, I don't like to take this bounce trade. Does it work sometimes? Absolutely it does. There is no 100% that it won't. But the reason they do that is for you to second guess yourself. Okay? They will make some good trades not work and make some bad trades work. Why? Because then you'll remember, oh, remember last time I took this trade, man, it worked. So you're going to take it and boom, it doesn't work. And you're like, why it worked last time? Maybe it was bad luck. Let me try it again. Right? And it doesn't work again. Meanwhile, what are you doing? Giving them money. Okay? There is no set. Don't take it. Remember, once it comes off this anchor formation 1 ADR, okay, if it's 154 pips or 160 pips, now I'm 2 times the ADR, I don't want to take a bounce trade in 2 times the ADR coming off from this low, right? Each anchor from here to here should be 1 ADR. Then I should look for a new anchor. Then I should wait for 1 ADR, then I should look for a new anchor. All right, so look at this, right? So if I'm coming off of here, 1 ADR, right? A little bit more, no big deal. Here's my anchor, right? Safety. Then I'm going to go into level 2, 1 ADR, right? From level 1 to level 2, 1 ADR. That's how you have 3 times the ADR, right? Rise. Then new anchor. All right? That's how Steve designed the level, the structure. EC. All right, so EC, we were sitting in level 3. Remember, if you have one leg, sometimes what they'll do is they will hit the water and come back and give you a second leg. All right, so if you take a look at this, it's pretty awesome. Only problem is they didn't touch the Mayo. Otherwise, this would be W of the Mayo in level 3 with one leg. I'm expecting price to come back to the high for the second leg. Let's presume this did touch, then you drop the fib, wait long from there. Of course, there's no entry on this one because they never pull back, and second of all, it is not really a W of the Mayo. But it does look nice though, look. Boom, close above 13, back below, stays below, and then shifts. Gorgeous. Okay? That's it. You only get one shot at it. One shot. Right? Don't be like, oh, W of the Mayo, W of the Mayo level 3 and keep going long over here. All right? You're going long at the high of the structure. Just a riskier trade. Okay? All right, so I'm expecting short. So let's see what happens. Because it's kind of messing around here, I'm not even going to short. I never, if you notice, very, very, very rarely will I take a short off the high. Because they tend to do this nonsense. Okay? All right. So Euro was the only, I think, decent setup, right? So here we go. Euro Aussie, we're expecting it to go into a level 3 from a level 2. I said I'm not going to enter trades in here going long because, you know, I had a 5200 cross to the downside and it was just kind of trading through all this EMAs with a mess. All right, look at the 15. Okay, so what I was hoping they would do is they would give me my anchor here. 1350 would bust through, and then when they do the bounce after the 5200 cross, that's when I was going to take it, but it never did, so there was no entry on it. Okay. EN. Now EN was one of those trades we were looking at right over here for a long. I was like, wow, look at that W, man. They spiked the 200, so one of the two legs hit the 200, 5200 cross W of the Mayo. One leg, one of the two legs got to hit the Mayo, which they did. Looking for longs. Okay, watch. So here's my W of the Mayo. It's a little ugly. We talked about this, right? One leg, and then they just kind of messed around until here, and then it did a little move over here going long. Some of you guys took it. It's a little bit hard of a trade. It's kind of hard to take this trade. All right, you got to measure the shift candle. You may have thought this was a shift candle, but it's not. Almost 12 pips. Okay, this one is a nicer shift candle. Okay, tip to tip, 22 pip. That's the shift candle. Not bad. So let's presume you thought, hey, look, first leg, second leg, look like a second leg, half a bat, beautiful shift candle, no wicks. So I'm going to go long over here, right? Boom, you went up about 15, 16, maybe 17 pips. And it closed below, you took a little scratch, -1, no big deal. It rolled over, you take it again, boom. Okay? That's it. Now, I'm coming up to W of the Mayo. If it pulled back and it gave me a bounce, it would have been over. It would have been lights out. I was expecting it to hit the stop low and rise and give me an ID move, which they never did. Okay? GU now is starting to move. Now it finally closed back above the 13. Look at the divergence, okay? So look, this was not a bad trade. Okay, this was not a bad trade. You got a first leg, close above the 13 back, second leg, railroad tracks. Not a bad trade. Why? Look at the divergence. It's a pattern. Here's the blue tracer, and it's created the W on the blue tracers. Perfect. Okay? Remember, there is no 100%, so this happened to fall in the point where, if you notice, this is my low, right? This is my low, right? Notice it never closed below it, but they were hitting stops below it. Okay? And they're now ready to move long. All right? But you can see that coming a mile away. You can see the divergence coming into it. Look at this move. Even up to here, this was just rolling up. Even the market baseline is starting to tilt up. See, in this area, the market baseline is already tilting upwards. Okay? So this is an example of where you take the right trade and it doesn't work. And that happens. Remember, their job is to make sure you don't take good trades. All right? You take the right trade, you take a scratch, it happens. But I'm in level 3, I'm looking for longs now, okay? GJ, same thing. I was in level 1. I was looking for a reason to go long. Notice the shoulder, head, shoulder move. Let's take a look, right? So this is my level 1. I'm looking for longs, right? So either I can trade the anchor or I can trade the bounce. So where's my anchor and where's my bounce? Well, this looks like my anchor, right? Because you can see the 50-200 cross back to the downside. Why? They want those guys who are trading 50-200 crosses to go short here, right in here. Boom, right here. Right, they'll go short right in here. Boom, like that. And then they're going to get smoked on it. Okay? And then they'll flip it up, if you notice. The EMA flips up. You see the little thing, and then they kind of look like it's going to go back down, then goes back up. That's what they're doing. So this is my anchor formation. Right? Then I notice my 1350 finally crosses. It goes down a little bit, finally crosses, but it doesn't matter. Right? The induced breakout traders, they come back, they hit the water, and they roll, and you just simply go long here. For the pullback, you measure from here to here. If it's 17 pips or more, you take it. If it's 22 pips, it never closed below 13. Boom, done. 50 pips. All right. A lot of people grab this trade, very proud. Okay. All right. This is your kind of sort of like this, because this anchor doesn't really have a pattern, so it's almost like a half a bat move, right? Like a half a bat, and then this is the first pullback. So this either you can take it as a AR00 or an ID 50. Only got one leg. Okay. So this is your second beautiful trade for the day. The first one was euro dollar. Okay. GC. All right. So GC, we had a double call over here. Level 1, short, potential reset. I was kind of going for. Okay, that would be my expected move, but it looks messy. 15. Look at that. It's just a mess. So forget it. No nice shift candle. So this is my first close below 13, back above, and then this one never really did anything. It does look nice, so out of the van in the van, but that didn't really do anything. Okay. Messy. GA. GA was coming off this anchor formation. Some of you guys like this move. See? They hit the round number, 1.6000 round number, right? Close above the 13, back below, back above. Now you know this is a half a back because the distance from here to the low is more than 10 pips. It's 20 pips. So this becomes my apex. So price has to break above the apex, which they did there, and you simply jump in and go long. You measure the stop, 30 pips. You want to make sure there's 30 pips here. Yep, there is. Take it. One candle, boom, done. Okay. I can tell you there's no bounce trades here because nothing came close. Okay. If you look, they come off this move, and then there's no ID move, no bounce trade. All right. Okay. So tomorrow I'm looking for them to give me a 1 hour 50-50 bounce. Okay, because it's no longer, I know it's close to the extreme of structure, but if you measure from the bottom to the top, it's about 228. Okay, so it's not 2 times the ADR, it's a little bit more than 1, but it's more than 1 or less than 2. So I just kind of marked it as 2. So I'm looking for a 1 hour 50-50 bounce. GN. GN had it in level 2 short. Okay, I know at one point I had it as a potential reset in here, and then I removed it with the 50-200 crossing back to the downside. So today I'm looking for a reason to go short, which never really played out. Let me explain. All right, so if you noticed, this was yesterday. Okay, it came off this move yesterday, and we're looking for a bounce. Okay, we're looking for a bounce in here, which never happened. So you see this bounce over here, you're like, okay, maybe I'll take this bounce. But if you measure from here to here, remember, this is 260 pips, ADR is 160, so that is more than 1 ADR. And you can see the pushes, right, coming into this anchor formation. Push 1, straight away, push 2, push 3. Now you got 3 pushes. Now some of you guys are like, well, I can take this one, maybe it's going to come down over here and give me a second leg. Okay, valid, valid, valid. Measure this candle. Let me blow it up. Measure this candle, right? You're like, okay, so that's my shift candle. Nice little no wicks. Okay, cool. It's about 28 pips. Maybe let's go 1/3. So right here is 1/3 approximately. 1/3, right? I'm going to go short, put my stop right above here, 17 pips, and it went about 24, 25 pips. Move your stop to break even. Guess what? Closed above the 13. Notice you walked away at break even. All right? If you take the trade correctly, you'll walk away with scratches, positive, sometimes negative. All right? So understand that. All right? But if you know that this went already 1 ADR or more than 1 ADR, don't take that bounce, man. Okay? Take it before it goes 1 ADR. So if it pulls about between 50 to 70 pips and it pulls back off the anchor formation, and your ADR is more than 100 pips, that's the one that you want. Okay? Okay, cool. So I'm looking for short, so obviously there's nothing there going long. GF. GF actually was very nice coming off this advanced W formation. Now ideally I like out of the band in the band, but you can see this advanced W. They did above the catch-up, below the catch-up, above the catch-up, R sign, above the signal line, above the market baseline for a long. Boom, right there's the long. 30 pips, easy. Okay, remember in level 3, you can trade M&W off the mail. So let's presume you took it. All right, the problem with this is there is no clean pattern. So it does look like a half a back, but that's not a shift candle, the whole candle. So that's the pass to me. All right, that's the pass. Don't take it, man. It's not the set. All right, so that's the pass. Some of you would have taken this long, like I said, in the advanced, on the advanced W. That's your entry. Boom, right there. All right? The advanced W. It's nice. Beautiful hammer. AU, we called it in level 2 short. We're coming up this. M off the male. We even called a railroad track off the 13. You guys remember? Okay, Ted is asking a question. After those moving average crosses, you wait for the bounce back to the water before you take it. I did not see what the chart was in the 15 or the 1 hour. So you remember which pair, Ted? The moving average cross. Oh, it was GN. You mean this move? Yeah. So so if you're looking off this high, right? Coming off this high, I'm expecting the first pullback somewhere in here. So London anchor formation, New York is my first pullback. Asia is my anchor formation, like this is late US session. Here's my pullback. So if I'm looking at too long, let's presume it was too long, okay? Let's presume it's too long. Here's my anchor formation, late US, 1350 cross. Here's my 50-50 bounce. Asia, right? Then I'm going to make sure that the distance from here, now this is the US session. I come into US session, it's 245. I said, man, that's more then I'm not going to take this bounce trade over here. Okay? Okay. All right, let's move forward. So where do I expect the pullback to go to? Coming off this move, I'm expecting to pull at least to the water. At least to the water, which would be the 200 EMA on the 15-minute chart. Okay? You got shark fin blood in the water, you got out of the band in the band you were waiting for, and it is oversold. So this is really nice. Okay, it's even better if the second leg goes below the first leg and you get divergence coming in here. Right? So here we're looking for a reason to go short, and we're looking for a bounce straight to the short side. Here's my anchor move. Coming off the blueberry, I got a 1350 cross. I got almost like a ID safety move in here, and then your entry is literally right in there with short. Boom. 80 pips. This was a very good trade, by the way. I know a lot of you guys grabbed this trade too. Phenomenal. Very proud. Okay. NU. You guys grabbed NU too. Okay. NU level 2 short. So we're waiting for them to spike, then give you a intraday move. All right. So we were talking about this in the pre-market. Here's my anchor move, right? A shoulder, head, shoulder. So I'm waiting for the 1350 cross, and I'm waiting for them to give me my bounce trade. This is a little ugly. Okay, they were just kind of hanging out, and then they just took off. So if you missed it, that's okay. All right. You see, this was drama. Remember, I was telling you to wait till that 1 hour close below the 13, which it never did. So there would be no reason why you took the short. Okay. That's what I was telling you guys. I said from here to here was 304 pips, which is more than 3 times the ADR. So the bias is to the short side. I said keep an eye out for this. Don't take the trade until the 1 hour close below the 13. Okay. All right. Let's take a look at the 15-minute chart. It is a mess. Some of you guys actually took, but this was right in front of the 8:30 news, so you should not have. But let's presume you did. You're like, you know what, close below the 1, I'm going to short it. So you wait for the 1/3 pullback and you take that trade. Okay, because it's a pretty big candle, the 35 pip, 30 pip candle, 35 pip candle. So you probably wait for a pullback. So 1/3 pullback is here, close above the 13, kill it. Why? minus 5 pips. Why? Because if it does a second leg half a back, you can absolutely destroy them. You kill it. When this one closes back down here, you kill him. You just take that trade. This is gonna go at least from here to here 30 pips. Okay? That's why you take this out, because you don't know they're gonna do this. That's the method behind the madness of getting out above or below the 13, because it's unemotional. Just take it, boom, out. It rolls over, I'll take it. If it doesn't roll over, guess what? I save myself a whole bunch of pips. Okay? Don't shorts over here, shorts over here, shorts over here, shorts over here, and now you're still trying to go short and you're going in a negative float. And meanwhile, you missed all the other trade that was going on. Okay? Alright, this is only one leg still, man. They still have not created a second leg, and this is the CAD pair. CAD pair second leg usually goes above the first leg. So if you notice, quick example, right? If this is my first leg, notice never closed below 13 until here, right? Comes back up. Notice my second leg is above my first leg. So if you anticipate the move and they're still in the first leg and you took a short, you're still going to get stopped out, even if you just stop above here, because the CAD usually goes second leg goes above the first leg. Okay? Don't do it. Here's another example of a reset. First leg, here's my second leg goes below the first leg. Okay? Exactly, it was dribbling, it was garbage. There was absolutely nothing there for you to show it. Okay? Don't do it. UF. So UF, we had it, here was our, it's just almost an opposite, mirror opposite of euro dollar. A lot of guys took this long, beautiful. Here's your anchor formation, and then you're looking for a bounce trade after that. So here we go. Okay, here's my half a bat. Close above. Here's my shift candle, right? Close above the 13, below 13, back above, half a bat, long. Right? Third pullback, and you're going long over here to here, it's about 25 pips. Then they come back to hit it, they close above, they come back again. So this is an ID safety. So if you took the first one right there, okay, 10, 12 pips, comes back and closes, you take a -3, no big deal. It rolls over, you take it again right here. Okay, right there. All right, some of you guys will take it right there. The confirmed one is this candle. When this candle closes, you get your confirmed entries right there. RSI line above the signal line, above the market baseline. You got a one leg out of the band, one leg in the band, in line with the trend. Absolutely gorgeous. Some of you guys went for 20 pips, perfect. It did go 30 pips. Based on your spread, either you got it or you did not. If you went for 25 pips, which is my suggestion, you got 66 pips. You're not going to get 50% of this range, okay? Just go for 20, 25 pips on some of these pairs. All right, what do? They followed it up by an AR00. Notice, one move, ID, AR. Comes right to the 00 line, smacks off the static, closed above the 13, long here, another 20, 25 pips. Your target should be up there, about 20 pips, boom, smoked it again. All right, it's structured, man, it's structured. Just follow the rules, follow our guidance in the DMR. Whether you're following, these rules, or you're following what Doug says or what Jim says, you have to follow it to the T. Okay? It'll give you some structure to be able to trade, so you know what's coming next, and that is the beautiful thing. All right, it's like knowing, hey, tomorrow's lottery numbers are. You're like, great, I want to know that. Okay. All right, so here we're looking for what? A 1 hour 50-50 bounce, right? Never happened, man. Never happened. It just kept going up, and there was nothing there. I can tell you by just looking at the 1 hour chart, there is no setup on this pair today. All right, I can see that it never touched the water today, so there's no entry. Well, this is nothing. Remember, it's always 2 pins to the water, 2 pins to the mail. Unless it does a star formation and a trapping move like that. That's a different story. Okay, there's nothing there. Just leave it alone. And besides, you're on level 3, you're not going to take that bounce trade. Why do I say that? Is because here's my high, and here's the bounce, right, where it touched the 13. So from here to here, it's approximately 285 pips, which is 3 times the ADR. So I am not taking that bounce. I'm not going long at the high. Okay. Euro pound. How nice is this? How nice is this advanced stem? Look at that. Out of the band, in the band. When this one closes, RS line below the signal line, below the market baseline, short. 20 pips. Take 20. It's less than 100. And here's the natural target. Okay? They did, of course, come to the zone flip area. They hit it, and they roll back up. Could you have taken the long? Well, let's see. It's kind of ugly. If you did, you probably have to go long in here when it closed above all the EMAs. Thinking it's going to come back up here for 20 pips. If you took it and it closed below the 13 here, you took a -3. It's no big deal. -3 is nothing. Okay? If you look at Forex.com, EN, the spread on EN is 7-8 pips, so this is nothing. Less than your spread on EN. Okay? How beautiful is this? All right, look at it. This is gold, by the way, right? Here's my anchor formation. 1350 cross, first pullback. It rolls. I know the blueberry is there. To bust through the blueberry and short it. Boom. Now you're like, well, this is not really qualified. Why? If you measure from here to here, it's like about 18 pips, not 25 to 50 pips. Then this is your first pull. So this is the pullback. Closes below, you short it. You got at least 27 pips to where your last trap volume is sitting, so you take it. You only got a foot soldier in, boom, 50 pips. Okay? It's pretty awesome. Okay, this is a safety, by the way. Safety up in here. So if you look, if that is safety or what, it comes off this peak formation, visible stop hunt, give you an M. Wait for it to break, boom, 50 pips, one candle. It's pretty cool. Right, so that's my safety. Push 1, push 2, push 3, push 2, 1350 cross. Here's my ID safety, looking for shorts. Awesome. Anyway, I look at charts all the time, by the way, so I'm a chart nerd. All right, any questions? All right, I see no questions. Let's get to the presentation. We are going to look, what currency is, it's gold. Gold, there. Okay. On GU with that large W on the weekly, daily, can we expect a large safety move, long move coming? Yeah, exactly, Jane. I'm expecting GU to start moving up. See, the problem with that is, you know, you have that Brexit thing going on right now, so there's actual financial news that's driving that. So as much as we want it to go long, you know, they're trying to, I don't know, appeal it with another vote and this and that. There's a lot of stuff going on with Brexit right now, so we really don't know. Okay, but as far as levels is concerned, yes, it's supposed to go long. Okay? Awesome. Hey, David. All right, let's do the presentation. It's pretty cool. I'm excited about this presentation. We've done this many times. All right, but we cover this topic pretty much the way the curriculum is scheduled and laid out. I pretty much just touch on one topic once a year. All right, so either you have a presentation and a quiz or some combination of that. All right, so anyway, we got resets. Okay, so I'm calling a reset a new anchor. Okay, so what is a reset? Well, guess what? You know, A reset is the new anchor. That means from the anchor, you're looking for 3 moves to the downside, 3 pushes, 3 levels, 3 swipes, whatever you want to call it, right? A reset happens when the market makers want to continue the sentiment or trend in the market after having pulled back to book profits. So the reset is where the area, like just like a level 3, when the market makers kind of like, okay, I'm booking profits, I'm rebalancing my books and all that, you know, I'll call it jazz, all that stuff, right? So that's what they're trying to do. So they've already pulled back to book profits, and that creates the new anchor. Okay, the market makers are completing the market maker cycle, which we call the benchmark, or 3 days of drop, 3 levels of rise, things like that, right? On all the time frames, the daily, the 4-hour, 1 hour, etc. Thereby creating a new anchor on the next lower time frame on each level. Okay, kind of interesting, right? What do I mean by that? So if this is the move which we've seen over and over again, we call this the benchmark, right? And these corresponds to the consolidation zones, right? If I draw something like this, some of you guys are like, that's the 1 hour. Some of you guys are like, nope, that could be the daily. It could be the 4 hour. It could be the 15 minutes. Where's your best entry? Right there, the safety. The 1 hour 50-50 bounce. The ID50. The 4 hour 50-50 bounce. 50 bounce, all right here. It's the same move, okay? So if I'm looking at this right here, this is where they're coming and hitting the stops, right? This is where my reset's going to be on the next lower time frame. So if this is the 4 hour move, then this is where the 1 hour reset's going to be. If this is the 1 hour move, this is the 1 hour move, this is where the 15-minute reset's going to be. Okay, hence MNW of the mayor, safety, potential reset zones. Okay? All right. So, how do you find a reset? Pretty simple. You look for the market makers to drop 3 levels on the 1 hour chart. Remember, this is 1 hour. We've already done the 4 hour resets, okay? So look for the market makers to drop 3 levels, sometimes 4, in the 1 hour chart. Then you look at the 4 hour chart to see which level you're in. Okay? If you're in level 1 or level 2 on the 4 hour, but I've already dropped 3 levels on the 1 hour, expect the market makers to rise approximately 1 ADR. Why 1 ADR? Because the EMAs will cross. Okay, 1350 will cross sometimes. Sometimes they won't. All right, sometimes the 50-200 on the 15 minutes will cross, making people go in the wrong direction. Okay, so they'll rise 1 ADR. They'll rebalance their books. Okay, that's why it's called a reset. They reset their books and then continue in the retail trader trend, continuing the trend that they want to go. All right, resets do not necessarily need to drop 3 additional levels. They just need to go from level 3. Drop 2 level 3 on the higher time frame, and I'll show you an example of that. Okay. All right. So this is a levels recap, right? So we know this pretty well, right? So here's my anchor, 1350 cross. I'm in level 1. This one actually did a straightaway because I'm expecting them to do a 1 hour 50-50 bounce or a safety, which they didn't do. They just straightaway move. Okay. Now 50-200 cross. I'm expecting an M of the mail, which one of the 2 legs hit. And then got to take out this area and do a level 3. Pretty simple. Okay? That's the level. Now, here is the 4 hour level. 4 hour level. See? Close above the 13, back below, beautiful shift, no wicks. Boom, first entry. Alright? Then they punched it through. Level 1. 50-50 bounce, boom, and then they give you a second leg on the move. 50-200 cross, they come down, they hit the stop low, and then it goes into a level 3. Okay, quarter points, they hit it, they pulled off of it, they close below 13, they stay above it until they come back below. Notice this is my first leg, right? Notice there is no more than 4 candles above the first leg. I've got 1, 2, 3. Okay, So I got 3 levels of rise on the 4-hour chart. Okay, so here are the 1-hour levels on the same time at the 4-hour move. So notice I'm coming off this peak formation, right? I've got a 1350 cross. They come right to this, they took out this apex, right? So whatever this consolidation, the high of this consolidation, they took it out. They did a little stutter here, they break into a level 2, they hit the stop below, they rise. Now you could have said, well, that's all level 1, okay, then this one when they hit, this is level 1, and then when they took it out, this is level 2, this is level 3, whichever you want to call it. I call, if you measure also based on ADR, could be 3 ADR. That's why probably this one was based on ADR, so it's a little bit more than 3, so we call it a 4-time or a peak. The peak is at level 4. Okay, then when you have a 50-200 cross, you're expecting a W of the male. Okay, which they did. And then they continued, after the reset, they continued going higher. Level 1 lines up with a peak formation, and then it punches through, and then it goes higher. All right, so this move lines up with this move. Okay, and then what do? So this is this level 2 move. You see this big, huge pullback here? That lines up with this one, this big pullback over here. In the level 2 move, they come back down. You see the 1350 cross, and they cross back above, which would make the 50-200 cross down and then cross back above. They do this on purpose because those guys will trade the 50-200 cross. They'll go short in here, they will make some money, and then they'll get smoked. Okay, so what do? Well, this just happened to line up correctly into a level 1, into a level 2, into a level 3, and then from here they start coming back up again. So this level 1 will line up with here, this will line up with here, and then punch a little bit higher into a 3, into a peak formation. Okay, so this and this lined up with this. So instead of having a reset here, because they moved into a 3-step formation in here, that's why you got 3 levels of rise. Normally this would be a reset. Okay, all right, cool. Take another look. Okay, so what you do is this is how you do it if you're looking for homework, right? You start with 3 clear levels of drop on the 4-hour chart. You're like, okay, I want to figure out where my resets are. Okay, so notice when I come into a level 1, I should have a reset there. When I come into a level 2, I should have a reset here. So think about it. 1350 cross, when it does, it punches the 50, I should have a reset. Okay, when it comes back and it punches the 50 again, I should have a reset. Notice they didn't. They hit the 13, they hit the 13. That means it's going to do a water bounce. Okay, it's going to do a water bounce on the 1-hour chart. So this is what it does. So notice 1 4-hour level is 3 1-hour levels. So I'm coming up. So notice what I did, right? So these levels on the 4-hour, I marked as these black boxes on the 1-hour chart, so you can see the flow. All right, I came off level 3. I got a 1350 cross. They kind of messed around. Okay, they took out this low of level 1 into a level 2, kind of did a little straight away into a level 3. So if you measure from here to here is 3 times ADR. So all I went was on the 4-hour chart. I only went 1 level of drop, right? But I do have a 50-200 cross with the 1350 cross. Remember that, right? 1350 cross on the 4-hour chart. The 50-200 cross on the 1-hour chart. So I'm expecting this to come back and hit the water on the 4-hour, which is the male on the 1-hour, right? Which it never did. Came close enough, it did a water bounce because it did trapped up the 13 EMA. So it did the reset of the 13 on the 4-hour, which is the water on the 1-hour chart. Okay, comes back down, it stutters in here, lines up with this, and then it pushes to the downside. Okay, so where the 4-hour rolls over to drop into level 2 is the reset. Okay, so here's the 4-hour. They rolled over here to drop into level 2 on the 4-hour, right? This is level 1, right? Step 3 into level 1. So where the 4-hour rolls to drop into level 2 is the reset. So here's my reset. I'm dropping into level 2. Okay? So here's my reset. I'm dropping into level 2. So now, over here, I'm expecting to do what? 1. This is 1 consolidation. This is 2. This is 3. It never pulled back far enough for it to go 1, 2, 3. It never did that. It never pulled back far enough. So it fizzled sideways and it dropped a little bit, just enough to go into level 3. So this is my level 2 on the 4-hour, this black box, and this is my level 3 on the 4-hour. Okay, so that's why there's that little P. That means the peak. It never pulled back enough where it could drop another 3 levels. So you only had 1 reset. Okay, so it doesn't always have to have 2 resets. It's all based on whether they pull back deep enough for you to get a reset. But normally, on 3 levels of drop on the 4-hour chart, you should have 2 resets. Okay? All right, so here we go. The 4-hour levels with a reset. So this is the 4-hour, right? 4-hour with a reset. So I kind of went through 1350 cross, punches, then it goes up, and then it stutters, goes sideways, then it comes up to the blueberry. It throws a little half a back, comes back down, and then it starts rising, come up, lines up here, it punches through, and then goes higher. To the quarter point, it throws a little M structure, and then it drops back down. Okay? All right, so let us see what all on our chart, right? Remember, each one of these levels on the 4-hour, I'm going to mark with a black box on the 1-hour. Okay, so it looks pretty big. Okay, so here's my level 3. This is my level 3 on the 4-hour, level 3 on the 1-hour. I come off the shoulder, head, shoulder, 1350 cross, level 1, 50-50 bounce long. It breaks through this high, this consolidation, into a 2. All right. You could have said 2 here, but you got to measure the move. If it's less than, so if the distance from here to here is like 30 pips, that's not a whole level. You got to make sure that it goes, you know, deep enough. Okay, so 3 times ADR is got to go from here to here. Okay, so you measure it, and then you're like, okay, cool. So I got 3 times. So now I'm in level 1, right? So you see this black box because this is the lower one, that's the higher one, so this is level 1, right? So I'm in level 1. I'm expecting them to reset, but notice it's a 5200 cross, so I'm expecting them to reset off the male. Notice, boom, 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 half a back, or a W. All right? Here's my reset. Push it back up. This lines up with that, so I do have 1 reset already. Okay, now notice after the reset, same thing. When I came to a level 3, I was expecting it to come back down and give me a W off the male, which it never did. It started and it went higher 1 more time. Okay, so it fulfilled. So this is my level 1 on the 4-hour. This is my level 2 on the 4-hour. This is my level 3 on the 4-hour. Okay, in level 2, I'm expecting it to come back down, do that, and then when it comes back up, remember it comes down 1 ADR, right? So if it comes down enough, so when it comes back up just like this, the level 1 will line up with this level 3 here, which obviously didn't happen. Okay? All right. Remember that reset we did on the 4-hour? That's the reset here. So you see a second set of reset. So it'll come down. Notice I told you when they're resetting on the 4-hour, they'll come down 3 levels on the 1-hour. So when the 4-hour resets, you're going to get 3 levels of drop on the 1-hour. So it comes up this peak, you get a 1, 2, right? Maybe 3 times ADR. It'll reset and then it'll start rising again. 1, 2. So notice the boxes. That's my big reset. Here's my level 1. Here's my level 2 on the 4-hour and to a level 3. So notice no deep pullbacks. When they don't do deep pullbacks, you don't get another reset. Okay? Okay. Head spinning already? Minashi is too funny. He's asking me if UC is ready for a short. I'm doing a presentation. I'm not looking at UC, man. Here are the 4-hour levels. So you see 4 clean levels of rises, right? So I got 1, 2, 3, 4. So in theory, I'm expecting 2 resets in here. 2 resets in here. Okay, because I got 4 levels of rise, 2 resets. Okay, so here we go. Remember, these black boxes are 4-hour levels. All right, so I'm coming up this level 3. I got 1, 2, 3 move, 2 levels of drop, reset, 1, 2, 3 consolidations up. See, so this is level 1. I got a reset. This is level 2. I got a reset. That's the expected move. Normally, I would expect that to see that. Okay, so I got a reset, and then I come back up, level 1, level 2, level 3. It's perfect, perfectly done. Okay. All right. The best preparation for tomorrow is doing your best today. Okay, so some of you guys are doing great. You guys are preparing for tomorrow by doing what you can today. Doing homework, marking charts, asking the right questions, staying focused, not getting distracted by negativity. All right, always remember, the only person you can control is yourself. Your success is based on your performance and your performance only. Don't worry about what other people are doing. Focus on what you can do. And if you can't, or if you have some problems, reach out for help. Okay? We're here to help. Now, sometimes I will ask questions. I'll ask the hard questions just to understand your thought process. It's nothing personal. All right? Some of you guys I know personally, some of you guys I don't. So don't take it personally. Okay? All right, let me see what a whole bunch of people asking questions here. Yes, practice, practice, practice. David, thank you very much. Exactly, Ted. Follow the structure, man. There's a structure in everything, right? That's why we call it chaos theory. There's chaos, but then there is some structure to the chaos, right? That's exactly what it is. So Herman is giving a recap, okay? So basically a retracement on the higher time frame is a reset on the lower time frame. That is exactly correct. So if you see the 4-hour, it retraces from level 1, right? It does 1 level of rise and it comes back down, hit the stop, and it rises. That hit the stop is the reset on the next lower time frame. It looks so easy when I show it. All right. Okay. What constitutes the reset? Herman puts it the best. It's the retracement on the higher time frame, which causes a reset on the lower time frame, right? Because remember, it's fractal. So each time frame is going to try to form 3 levels of rise, right? So how is it going to do it? Okay, it's going to rise on even the daily does 3 levels of rise. So the 4-hour will have to have resets, 1 or 2 resets. Okay, if the 4-hour has 1 or 2 resets, each level of 4-hour is going to give you 1 or 2 resets on the 1-hour chart. And so on and so forth. Exactly, Lewis is correct. You need to count the depth of the pullback to determine if it's actually a reset. Exactly. So sometimes it'll pull back 2 levels for a reset. Sometimes it'll pull back 1 level. And if it pull back 1 level, it should be at least 1 ADR. Okay? The 1 ADR pullback is when they're pulling back to book profit. That's the whole purpose of the pullback. Okay? So they're long, they're going long. Guess what? They are net long. Their book's net long. They have to go short to book profit. So they're going to go 1 ADR, induce shorts, clear their books out, right? Buy all everything up, and then they'll turn back around and they'll go long again. Okay? You're going long, they'll sell to you until such a point where they say, okay, I need to pull back, because there's still people shorting along the way, right? So they'll pull back to book profits again, and so on and so forth. All right, Patricia, thank you. Lou, I don't know, man. Okay. All right. No questions. I will see you guys tomorrow morning in the pre-market. Have a good night.